This is my very first video on STI model, and I pray I'm able to do justice to it. Okay, so what we're going to be looking at, how to get set up to trade using structure. All right, we'll look at how to take entries and manage trades, and then that's it. Now, how do you get set up with structures? How do you decide, okay, this is the setup I'm going to be taking? How do you get those setups? So that's what we'll be looking at. How do you get setups with structure? So I'm going to be showing you the different structure you'll be looking at. The first is the trending market. So when I say trending market, it's either it's an uptrend or a downtrend. So how do you know an uptrend? When the market starts doing higher highs and higher lows, something like this. You see this. So this is called a higher high. This is called a higher low. So this higher high, higher low. So when you see this, it is a trending market, and this structure signifies a high. Okay, so that's what we would work with. All right, so the next one you're going to see is the downtrend. Okay, the downtrend, and it's like this. It makes lower highs and lower lows, lower highs and lower lows. Okay, so this is the lower high, and this is the lower low. Lower high, lower low, lower high, lower low. So this is it, okay, for trending market. So when you see this, it means that you can start checking for a setup. Okay, so this is one of the things you would see coming. How do you trade with it? How do you use it? How do you use this? Now, how do you trade a trending market? This is how you trade a trending market. So if it is a trending market, it means it will always make higher highs and higher lows. So what do? When you enter, when it's making a new higher low, that's when you enter a trending market. So it has made a higher high, you wait for it to come down to make a higher low. So this is where you can enter from. All right, and expect it to make another higher, and expect it to make another higher high. Okay, then at this point again, you expect price to come down and make a higher low, and then you join the flow. So what we basically do in forex trading is we join the flow. That's the major thing we do. You join the flow. You join the flow of the markets. You join the market makers. You join what they are doing. All right, so there's another way you can also trade an uptrend. The other way is it's made a higher high, higher low, a higher high. Now understand that sometimes the market makers might want to come back to a previous higher low. Okay, previous higher low. This is my favorite way of trading. This is my best. So what do? I wait, especially gold. This is how I trade gold. I wait for price to come back to the last higher low before shooting up. Okay, so it's not all situation that price might just come to the next form a higher low on a higher level. Okay, sometimes it might want to do an equal low, or you can also call this a double bottom. Okay, so this is my favorite way of trading gold. So I would advise you use this setup for continuation. So this is a setup right here. So when you see that price made a higher high, higher low, higher high, instead of trading here at this level, which is normal because this is a turning point, or you can call it a support level. So whenever price breaks a previous higher high, that level becomes a support level. So ordinarily, everyone expects price to come to that support level, turn it to I'll come again with that. Whenever price breaks, right, a particular higher low or go past a particular higher high, it forms a support level. Okay, so when it breaks up, a support level is being formed, and then price is supposed to come back to this point before making a higher move. But most of the times, the market maker does not do this, but rather they do this. Okay, and this is the safest. So when you get this kind of setups, let's say price is here, came down, went up, formed a higher high, you can see it. Instead of waiting for price to come back here to this level, you just wait for price to come back to that last low, okay, and shoot up. So this is STI continuation model. So this is our favorite. This is the one we use the most. This is good, but we use this one every now and then. Okay, I hope I've been able to explain that. Don't worry, I'm going to show you in the chat. Okay, so this is for trending market. So just to be clear on everything I've said, for a trending market, you can have two types of setups, right, for a trending market. Now, example, it is an uptrend. So the first setup that you would have is this. Coming. So the first setup you have is this. This is a higher low. This is a higher high. So this is higher high. Higher low. Okay. Now you met the market at this point. So the first setup you can have is this point here. You draw a line at this last higher high. So immediately price go past it. This level right here becomes a support. Now you are expecting price to come back, tap into this level, then form a new higher high because it is trending. That is the trend. It is trending upwards. So that is what is supposed to happen normally. So when it breaks a previous higher high, it's supposed to come back to that particular level, form a higher low, and then push upwards. So this is where you enter from. This should be your entry point. This level right here should be your entry point. So you enter it to this very point. Very simple. But most of the times, the market maker already understands that a lot of us are actually waiting at this point. So what would the market do? So the market sometimes does this. So the market sometimes does this. It gives high, higher low, higher high. Instead of coming to retest this level, it doesn't. It push lower to form an equal low. Or I call this the last low. This is where you can take your entry in a trending market. So you can enter from here and push all the way. Okay, so this is STI continuation setup. So this is our continuation setup. We like to use this particular one, the last low, when the market is trending. Okay, so this is what we do when the market is trending. All right, so I think we're done with that. Let me clear. Okay, we're done with trending markets. The next is impulsive move. What are impulsive move? They are impulses in the market with very high momentum. All right, what are impulsive move? They are impulses in the market with very high momentum. So I'll show you an example. Let's say the market is trending like this, and all of a sudden you see something like this. So this right here is an impulsive move. Okay, this is an impulsive move, and most of the times you easily identify impulsive move by it breaking multiple structure. On a norm, the structure is supposed to go higher high, higher low, like we saw in the trending market, right? It's supposed to be higher high, higher low. But when it's an impulsive move, instead of doing higher high, higher low, let's say there was a previous higher high, higher low, higher high, higher low in the market. Initially, the price came down like this, right? So an impulsive move will take all these lows or all these highs, right? To take everything and just go like this. So at this level, we have a setup right here. We use a tool called a Fib tool. I would show you in the charts how the Fib tool work and how we use the Fib tool. So we use a tool called the Fib tool and wait for a retracement to a particular level in the Fib tool before taking our trade upwards. Okay, so this is the impulsive move. When the market moves like this and boom, you see a long candle just without stopping to retest any support or any resistance level, you just keep going up. So this is another kind of setup. So what we do is with our Fib tool, we mark, wait for a retracement, and boom, we're done. So that's for the impulsive move. Okay, then the last one is ranging market. We hardly trade this, but I'll still have to explain. I'll still have to hardly trade this, but this is how it looks like. It makes equal highs and equal lows. Instead of higher highs or lower highs, it makes equal highs. So what you do here, you mark the levels. So when you see this, there's already a setup for you. So you just wait. Okay, let me make it neater. Let's say we have something like this. Price comes down like this. So I know that when I enter from here, it's going here because what is happening right now is that price is ranging, or you can also call this consolidating. So this is what you do. You can use this to take a trade. So that's for that. So now I want to take you to the chart. So we'll see how everything works in real time. All right, we are going to see first an example of an impulsive move. So I would have to play my, let's play the charts so we can have an example. Okay. Very good, very good. This right here is an impulsive move. You can see it. And I said to know an impulsive move usually has big candles or long candles, and it breaks plenty levels. See, price was coming down like this, and all of a sudden, boom. So this is an impulsive move. So how do you trade this impulsive move? This is what you do. You wait for the first bearish candle to form. The first bearish candle to form. Okay, so that's what you wait for. So once we get a bearish candle, good. This is our first bearish candle to form. You get your fib 2, the beginning of the move. Boom. So this is where a reaction happened, as you can see. See, there was a reaction here from where the bearish candle formed. So what you just do is you mark the levels. Okay, mind you, this is our structural levels. So this is not for entry. It's just for getting your structure. Okay, let me take this back. So this is our, we're interested in price touching this, either of this line or just coming into this area. Then we'll move to an entry time frame where we want to take our trade from. Okay, so from a lower time frame, you even discover that price was also trending. Price made a high, a lower high. Price made a high, a lower high, and broke higher. So now this level is aligning properly. Okay, so at the close of this bullish candle, we are to enter, because from what we have here, price is trending upwards. And remember the rules: like this, like this, and like this. And that is what we have here, as you can see. So this is a beautiful setup that aligns with our entry time frame. See, this is exactly what we have here. And then after that, it's supposed to come down, test this level, and push higher. So what we are going to do now is wait and see what price does. So price closed bullish. So this is a confirmation that buyers are in now. So this is what you do. Sorry. This is what you do. You set your SL below this level. So let's leave it at 25, and we target a 1 to, I'll always prefer a 1 to 2 because we are intraday. A 1 to 2. Target a 1 to 2. So let's see how it plays out. Let me make it faster. Okay, let me make it even faster. Okay, as you can see, price came back to touch this, our fib level, and it continued pushing higher, and boom, our TP, a 1 to 2. What a beautiful trade. It was a beautiful trade. Okay, so that's how you use the fib 2 for this. Very easy, very simple. So price still came back to this level, right? And boom. So this is how you use your fib 2. But let's talk more about the trending market that I told you about. Let me take it backward so you see how it was trending. Okay, let's take this out. So let's say we came when this has already happened. Now we saw the market from this point. Now that price broke this level, we expected a retest, which is happening right now. The price came back to test the level that it broke, forming a higher high. So you now will enter at the higher low. That's where you get your setup from. So if this is a high, higher low, higher high. So I told you there are two ways. Either you enter from this level when price comes back to this level, or you enter from this level. Okay, so let's watch. Let's use this level and see how price will react to it. And take note, whenever you're taking a trade, take note of what is happening inside that particular structure. If you check here, there is a hidden support level that price formed. Okay, this is the last low. So price did higher high, higher low before pushing upwards. So this is actually the last low. But don't worry yourself about that. Let's use this area. Okay, now this is our area of interest. Let's go to our entry time frame to check for entry. So let's see what price is doing. So immediately this candle closes above, we can go in. Good, this candle has closed. So let's also target a 1 to 2 with our XL around this. Your XL should always be at the place that you expect price to come back to. So these levels, I'm going to teach tested and untested levels so that we'll know how to get sharper entries. Then I'll teach M's and W. So let's see see, boom. So this is how you use the trend for setup. Okay, so all we just did was we had a time frame that was our structure time frame, and then we had a time frame that was our entry time frame. So when price formed a higher high, we waited for it to retest this area here and form a higher low, and then we entered at the close of a bearish candle, a bullish candle, and boom, this is what we have. It can be as simple as that.